What is going on, Future Focus team? Back at it with another video. If it's your first time to the channel, thank you. Welcome. If not, welcome back. The purpose of this channel is to educate and entertain you, but the ultimate goal of this channel is to make you a little bit smarter today in order for you to have a better tomorrow. And with that said, today we're going to start off by going, just do a quick review of some of the things that happened this week, some of the key things I think happened this week. We're going to follow that by stock pick of the week. It's going to be a dividend stock. And we'll end it with some questions, whatever questions you guys got. All right. So with that said, let's go. All right. So the first thing I think was really important was that Joe Biden, he introduced his selection for the Treasury, and her name is Janet Yellen. For those of you who don't know who she is, she's an American economist. And the big reason that the stock market was really excited about it when they heard the news, because it was like 3 straight green days after she was announced, was one, what she does directly correlates with what goes on in the economy in America. And she has a history because she served as the Fed chair from the Federal Reserve from 2014 to 2018. And she was a vice chair from 2010 to 2014. So she's seen that side of the house. And, you know, people had positive idea of the way she handled things. So, you know, they see positive things going forward. People really felt that her selection was a really good choice. Matt, I want to get your take on what you thought, like if you had any sentiment at all toward her being selected. Did you care? Like, how'd you feel about it? I know you're big on this kind of thing. So how'd you feel about it, Matt?
Just to be honest, again, not making it political, right? Because when you look on the page, it lets you know if they're Republican or Democrat, and it gives you an idea which way they're gonna rule the Fed. But my initial take was, man, that's dumb. Get out of there. Get out of it, man. That's not a position you want twice. It's almost like having a bad billet. You know, like, you know, when you have one of those tough billets, you're like, man, I made it out of there. Yeah, keep it going. This is not a billet you won twice.
I appreciate that. Well, you know, we'll see how she does going forward, but the fact that she was selected is a big deal. You know, do your research on her, see what she did previously in the past. You know, she has extensive research, and she's big in the economic community, which is at least something you want, because at least she's going to know what she's talking about. Steve Mnuchin, Steve Mnuchin, a lot of people didn't really feel that he had the economic background to get appointed to where he was. I see Matt laughing over here in the background. But you know, take your own take. This is not a political channel. We're not picking sides here. Again, we're just reviewing the week. Next, we're going to talk about gold, some of the gold action that we saw during the week. There was a big drop. So as you can see here, this is the 5-day chart. As you can see here, right before 27 November, it kind of sunk a lot. That kind of correlated with some of the news coming out with AstraZeneca and Pfizer and Moderna, some of their results coming out, you know, saying they're 95% effective, 90% effective for the, you know, CV. I can't really say that on here, but you know what's going on in the world. But they're saying it's effective for that virus. So I know this is your realm, Matt. Like, you already know how I feel. I see it going down. I don't think it'll go back to 1,200, 1,300, but because people are so optimistic about 2021, the price is going to drop, because gold has kind of been that fear play. People go to it when there's fear. So since March, there's been a big fear because of what's going on with the Federal Reserve, with their printing money and printing money and printing money. And there's a direct correlation between inflation and gold. Historically, they're like as correlated as any other two assets can be. So when inflation is rising, so, you know, the price of gold is rising as well. What do you got, Matt?
Yeah, I'm gonna keep it short. Listen, the fundamentals for gold, and it it breaks my heart, but you might as well throw this in there too, for gold and Bitcoin. The fundamentals are the same, man, and they've been there before Corona, and that is the national debt and the printing of money. So I don't know if you've heard the latest statistic being thrown out there. 22% of all dollars ever created was created this year. Oh man, it's gonna be
Wow.
a good time for gold and Bitcoin. More so Bitcoin. Simply put, it's not as, man, I hate to say this. It's not as manipulated as gold, but better believe at some point in time, it could be next year, 2 years, 3 years, the price of gold will catch up. And make no mistake, when you look at these drops in gold, they all happened on the same day. I
Yeah.
want to say it was Monday. So every time that news kept coming out, that price, it's what's the odds of that, right? So
Yeah.
like, the price should be baked in already, if that makes sense. It should have just keep dropping and keep dropping, and it's a reason for that.
Yeah. So, um, what do you think? What do you think? I know you're saying it's going to go up. Do you want to throw out a bullish like 2023, 2022 number? Like, where do you see it? What? Because you got people out here that are going to watch this and they may be interested in buying it, but you know, when you buy this, remember this is not an investment. This is a safe haven asset. This is not something you're trying to see your money double. However, you don't want to see it go down, and you would like some positive return on your investment. So, uh, what should people expect in 2022, 2023?
I'll go so far to say I'm pretty positive if for 2021 we're gonna pass 2000.
All right,
Uh,
I'm writing it
it's,
down.
it's gonna come back
2021,
up.
2000. Hey,
Yeah,
hey,
easy.
get on DraftKings and put in your bids for that right now.
That we got that part covered too.
Yeah. So next we're going to talk about Bitcoin, and same thing. We're going to go through the Bitcoin price action this week because they also had a similar drop. Um, the reason of their drop though is kind of different. The UK threw out their potential ban on some cryptocurrency assets that have been going out in the market, and obviously when things like that happen, negative news, people are going to use that opportunity to either dump their Bitcoin or dump their cryptocurrency. So cryptocurrency across the map dropped anywhere from 8% to 15%. So this, I personally feel this was a buying opportunity, and there's plenty of reasons for that. There's different types of people in the market. So last time Bitcoin was this high, what happened was it was what was it, 2017, it hit almost 20,000 in December of 2017. But the people that were investing in it at that time were totally different. The people that were investing were people like you and me, retail investors, and a lot of them were people who didn't know anything. They just wanted to put their money in something that they saw flying up. They had no idea what cryptocurrency was or what Bitcoin was. It was just like, oh, this is going to double my money. All right, let me throw my money in there. And like everything else, people follow the herd. And when they see it flying up, they jump in there. But what ended up happening is that price, as you saw in March, it fell all the way back down to 3,000. So imagine all those, people that were hurt because they bought at 19,000, 20,000, and now that price is at 3,000. It hurt a lot of people's hearts, and they probably got burned, and they're never going to invest in it again. But a lot of people who are investing in it now are the financial institutions. Now you have big hedge funds making big plays and investing in Bitcoin. You have about 3 different companies that are trying to make ETFs for cryptocurrency. You have even Matt's man, Ray Dalio, came on and said, when he found out that Druckenmiller had invested $1 million or something crazy into Bitcoin, he's like, oh, well, I must have missed something. I must have been missing out on something. So even he's kind of changing his tune. And no matter what, you're always going to have people who are there. We call them Armageddonists. Like, it's the end of the world is coming. The end of the world is coming. So you're always going to have that type of people that will say that about, things like cryptocurrency. But there is a bullish following behind it now. The people who are investing in it are not throwing it away. The difference now as well, I wish I would have had the chart. The amount of people that are actually taking their money out of the market and putting it into wallets, into digital wallets, has grown about 80%. So a lot of people aren't just trading it, they're buying it, they're taking it out, and they're putting it in either a digital wallet, or they also sell these wallets that you plug into your computer, and it's like a hard drive. They call it cold storage, so you could pull it out and walk around with it. A lot more people are actually holding on to it than trading it. One thing I did want to mention that I didn't mention last week is that another plus for cryptocurrency is that it doesn't close. So 24 hours a day, 7 days a week, you can invest into cryptocurrency. You can buy and sell Saturday and Sunday, holidays, 24/7. You can take your gains, take your profit, or if you want to buy in, you could buy in. So that's another pro for cryptocurrency. Colton, Damian, Kid, do you guys have, like, what do you guys feel about cryptocurrency? What are some of the things you've heard? Can't really see you guys. I'm not sure if you guys are still there, but
Yeah, I was just listening to what you had to say. I don't really have a direct opinion on Bitcoin because I don't really know too much about it other than, the fact that it's just the predominant cryptocurrency. So I was just here to like try to pick up on some info that like y'all were putting down really, but
you have questions, man? Like, do you have any questions on cryptocurrency that I could try to answer for you?
not at the moment, but if I do, if I do, I won't hesitate to ask.
All right, cool. Sounds good, man. Kid, you there?
Yeah, I'm here.
You got anything? You got any questions, comments?
No, not really. I only got like 500 in Bitcoin. That's about it.
All right. What about you, Matt?
So, what's your sentiment for Bitcoin for next year? And the follow-up question is, why do you have if you do have a different sentiment from Bitcoin as opposed to gold, why is that?
So great question, man. I have a bullish sentiment on both for the same reason. They're both, Bitcoin has kind of become that safe haven asset. And the more you look at it, the more both of their charts are kind of correlating with each other. So people are flooding into it. For me, Bitcoin is more of the future outlook, like looking at things, that the way things are going to be in the future. And gold is kind of like that historical value. It's actually physical. We've talked about it. There's actually some substance behind it. They're both assets that you can sell, when the market is closed. You can sell them at any time. I think Bitcoin is easier to get rid of than gold is, especially if you're dealing with large amounts. Doing it safely is very difficult. And Bitcoin, it's on digital, but it's been going on for 2012 it came on. Now you're going on 8 years and it's never been hacked. Ethereum was one that people thought got hacked. It didn't get hacked. There was some errors, some deficiency that happened when they were trying to transition from Ethereum to Ethereum Classic. There was some issues there. But I'm very bullish on Bitcoin, and I could see Bitcoin going to 30,000 in 2021, especially with the people that are investing in it right now. But I think any dip is a buyable opportunity. When Bitcoin was $100, I was the one saying, "What is this? I'm not investing in it." And here you go, it's $18,000. Same with gold. Like gold was what, 1,100, and I would look at it and be like, "Why do people even buy this?" And now, it may be because I'm more grown. I'm actually looking at it like, same way Ray Dalio did. Like I must be missing. I must have missed something. But does that answer your question? Yeah. All right. Next one we're going to talk about is a lot of people have been asking about real estate, and this is just a more personal issue. I wanted to talk about, there's not always rainbows and all that. There's some bad stuff that comes across with it. So when you're investing in real estate, I just want to share a personal experience real quick. Because of the virus, my tenant's son passed away. This happened while I was in Australia about 5 months ago. The tenant did everything right. They stayed, they gave me enough warning. They stayed. However, when they left, there was a lot of damage that had been done to the house. And before the next tenant can move in, you have to, pay for that. So that's why it's always good to have a rainy day fund or some type of savings whenever you have a real estate property that you have tenants in, because the amount of money for their safety deposit may not be enough to cover all the damages that were done. The damages that were done weren't even them. It was some flooding that happened in the house and the second floor. So it kind of flooded through the bottom. So there's drywall paint that had to be done. Altogether, with everything that they said they recommended I had to do, it was about $9,000. The things that I had to do was about $3,400. So I kind of met them in the middle and did a little bit of both. Some of the other things I'm going to do, they're not really necessities. They're just recommendations, update the kitchen floor, things like that. But in order to make it safe and actually, livable, they had to repaint the whole house. It's something that has to happen every single time. Carpets had to get cleaned, and if they can't be cleaned, they have to get redone. So if you are planning on investing in real estate and you plan on having tenants, just make sure that some of that extra money that you're making, you're putting some of that aside every month for these emergencies, because they're going to come. Things are going to break. Since I've had this house for about 10 years now, things like the AC unit have gone out. I had to replace the whole AC unit. That was about, $3,400. There's going to be big things that happen. So even though they're paying you and you're making money, don't just take that as money to spend and reinvest that back into the house. So I wanted to share that. All right. So the main one, the one you guys are all here for, the stock of the week. All right. So today we're going to talk about Elise. All right. If y'all haven't heard about it, we're going to go through it. All right. This is a dividend paying stock. The reason I chose this one is, again, I'd like to choose stocks that people aren't really talking about. And Damien Kidd, he messaged me earlier throughout the week, and he asked what were some good dividend stocks that he would recommend. And this is one that I like. All right. So who is Elise? All right. So they own 21 companies in 11 countries. They have 375,000 employees, 70 billion revenue, and they're a Dutch retail holding company. So they're not an American company, but they have American brands that you guys are going to recognize. So if you look through it, I'm sure you've seen some of these: Food Line, Stop and Shop, Giant. I'm sure these are companies that you guys have either seen or heard about, along with other companies that they have throughout Europe. But these are well-known brands that you guys know. The big thing that's happened with them lately is they just made a big acquisition with Fresh Direct. I'm not sure if you guys have heard of Fresh Direct, but they're big in New York. They're big in Atlanta. They bring fresh fruits and vegetables and food straight to your house, just like Grubhub or something like that. But they bring fresh food, and their goal is to deliver fresh food to everybody everywhere in the United States. And they've been growing year over year. So this is a huge purchase for Ahold. Frank Mueller, he's the president and CEO of Ahold, and he's been with them for a few years. As you can see here, he was the chief executive officer and integration officer since 2016, and he's been with them since about 2012 in different capacities. So this is something from their Q3 report. Some of their forward-looking, the way they're trying to go into the future, moving into supply chain and technical capabilities. So this shows you on the left where they are right now. They're in U.S. market household coverage 90%. They're trying to move things to the consumer, and a lot of this has been rapidly accelerated because of the coronavirus. All right, so their U.S. online capacity will increase 100%. Their EU online capacity increase of 50%, including over 50% at Bowl.com, which is one of their websites that they have in Europe. That is like a Fresh Direct, but in Europe. Doubling U.S. click and collect locations, 1,400 at the start of 2020. Self-distribution model coming to the U.S. in early 2023. First integrated DC of the initiative will go live in 2021. double electronic shelf labels to about 50% of European grocery stores in 2021 versus 20 in nearly all Albert Heijn and Delhaize owned stores by 2020. Some of the highlights from this quarter in the United States were 115% online growth, 883 click and collect points at the end of quarter 3, completed 11 Stop and Shop remodels. Food Lion remains their fastest growing brand. I've seen Food Lion. I've shopped at Food Lion when I lived in North Carolina. Giant Food and Stop and Shop e-commerce platforms were integrated and revamped to provide a better consumer digital experience. These are some of the highlights from Europe. I'll leave it for a second, but they're very similar. And strong growth continued into quarter 3, which was, like we said, largely driven by COVID-19. And we talked about all the different things that have affected that. We've seen this through all the consumers, Kroger, Walmart, all the consumers that have groceries, they've experienced this growth because people were staying at home more often. This is a dividend stock. Again, I put this page on here because this stock pays a dividend every 6 months. So not every quarter, they pay a dividend every 6 months. And their ex-dividend date will be April 16th, 2021. That's the next time they'll be paying out their dividend. Quick look at the chart. This is a year chart. So starting year to date. So as you can see in March, it dipped along with everything else, but since then it's grown. It's currently at 23.61 euro, which is about $27 US. You can't purchase this on some of the regular apps. I don't think this is on Robinhood. I own it on TD Ameritrade. So, this is a foreign stock. I'll just go back and touch one more thing. If you're going to buy this, don't buy it inside of your Roth IRA, because when dividends are taxed from different countries, they're taxed in your Roth IRA. So it kind of defeats the purpose of having it inside your Roth IRA. If you're going to have this for dividend payments, it pays a 4.3% dividend. So if you're going to have that, nice dividend, it kind of defeats the purpose to have it taxed in a taxable, non-taxable account. If you're going to be taxed anyway, just have it in your regular brokerage account. But that's it. That's the stock of the week. What questions you guys got? What can we talk about?
I got a question, sir.
Go ahead, man. I can't see you. I can't, and you're whispering.
So, you know how in your Roth IRA you can only do 6,000 a year?
Yes.
So right now I'm trying to do everything within my Roth IRA, but once I hit 6,000, what do you suggest doing?
Well, you could still do 6,000 for the next year, so you should have a total of 12,000.
Oh, so you can go ahead and go into the next year if you wanted to?
Yeah, so like in 2019, I put in 6,000 for 2019, and I also I put in 6,000 for 2020, and then I went ahead in March and put in 6,000 for 2021. So I maxed out both years. So you could already put in for your 2021.
Should be good now.
Yeah, so you could start, and it shows you on there. It'll show you, do you want to add for 2020 or do you want to add for 2021? So you could already start making additions into your Roth IRA for 2021. Great question, though.
2021 market outlook.
What's up?
Your 2021 market outlook.
Oh, great question, man. I was actually going to get to that in December, like as a end of the year kind of thing. But looking at it right now, I do see a 40%, 50% drop coming for the indexes. So as you've seen the last few weeks, we've had a big rotation. We've seen rotation out of those winners, and they've gone into things like Carnival Cruise Lines, which is up about 50% the last 2 weeks. You got American Airlines, who's up about 35% the last 2 weeks. So there's been a big rotation from tech into some of those return to normalcy stocks, as they like to call them. But I see a correction coming. I think we're very overdue for a correction. We didn't have a full correction in March. Obviously, you know that. And I see it coming, but you got to also look at your portfolio and say to yourself, like, am I ready for that? Am I willing to see these stocks that I'm up over 100% on drop? You got to know when to take your gains, and you need to have money on the sidelines for when something like that does happen. So anywhere from 10% to 30% in cash is what I recommend for when that 50% drop comes. Start nibbling in. Remember, like, you don't want to be. Let me pull this up. I think I could share. Let me share this. The market does this. This is not any stock in particular, mind my drawings, but every so often the market is going to drop, and it's kind of impossible to time it. If you're trying to time these bottoms, you're most likely going to miss them all the time. So when you look at this, look at the individual stocks that you have. Don't look at indexes. And if you're here, you're fine, because you're going to buy again here. You're going to buy again here. You're going to buy again here. And then when it goes back here, instead of your average price being here, your average price is going to be somewhere around here. So when it goes up, you're going to be good. You don't have to wait. I'll get it. Is there stocks like Walmart where their stock dropped for about 10 years? It hit an all-time high, and then for like 10 years, it had what Ray Dalio calls a dead decade. Like, it didn't reach that all-time high again for about 10 years. But if you would have done your dollar cost averaging and you didn't sell and you stayed the course, now you'd be up about 50%. So it all depends on knowing your own portfolio and not following trends, not following what everybody else is doing, because that's usually going to get you burned. What about you, Matt? What's your take?
So yeah, I hear a lot of experts saying they're predicting a crash. We're overdue for one, but one expert made a very interesting comment, and he said that if we do hit a new all-time low, he said expect to stay there for a while. The way I look at it, I really don't know. It could go up, it could go down. I know that's the cliche. It could go, but you really don't know. But I see both scenarios playing out. I see them pumping it up if they have to. I see it crashing because there's nobody on the other end to buy. With that being said, I'm just focusing on hedges that succeed no matter if the market goes up or down.
Great point. So, I mean, are you getting back into the market now, or are you still playing it safe? I know you've always been in the market. I know, but
Right,
I'm saying,
right.
are you getting into?
I know what you mean.
Are you getting into equities, like regular equities, not just mining stocks? Like, are you dipping your foot in? What's up?
I really want to. I'm like a kid at the edge of the pool who can't swim. I really want to, but these evaluations are just they don't make me feel comfortable, and I understand that it could be cheap. Like Apple could be cheap this year as opposed to next year. Tesla could be even cheaper, but I'm willing to take that loss because I'm just not comfortable with the evaluations.
Gotcha. Colton, what are you invested in, man?
I actually recently just started my investment account the other day, a brokerage account with Fidelity. Just basically trying to take in as much knowledge as I can, before I make, like major decisions and where I want to go in my portfolio, you know what I mean?
Okay, so have you bought anything, or are you still waiting?
Well, I'm waiting for the market to open because I just opened it yesterday.
Oh, okay.
Like 2 days ago, technically.
You have something that like you got your eye on?
Yeah, I want to try to invest mainly in like index funds as opposed to like individual stocks.
Okay.
Trying to do it like long term, but listening to like what a lot of y'all like what y'all been saying a lot of with these like individual ones, like the one you just showed me with Delise.
Yeah.
You know, the one like that. It seems like I probably should like expand my horizons as far as like individual stocks and like certain sectors.
You should, brother. I'm actually next week. Matt already knows this. I don't know if Damien does, but I have reasons why I don't do index funds at all, ETFs. I don't mess with them. I
Okay.
used to. I used to even recommend them, and I still recommend them for people who are like maybe like you who still don't really know. But if people have time, I recommend. I'm not going to ruin it all here, but next week I'll be going through my 3 reasons why I don't invest in ETFs. And again, it's not. I'll preface it by saying it's not a big negative thing. It's just that I have time to actually go through and look at stocks. As you can see, like I could get really thorough and actually pay attention to what I'm investing in. But for those who don't have time, ETFs are a great haven because they're more of a safety trade. But stay tuned for next week. I'll be going through the 3 reasons why I don't invest in ETFs. Damien, any last questions or comments? We got about 3 minutes and 40 seconds left.
Do you have any more news on MP materials?
What's up?
Do you have any more news on MP materials?
Not this week. I mean, since last week, since we talked about it, both the stocks I talked about have gone up immensely since I brought them up last week. I'm not saying it's because of me. I have like 25 followers, so I didn't move the market. But since I mentioned them to you guys last week, both of them have gone up about 26% collectively. They've gone up a lot. At the end of on Friday, Palantir actually pulled back a little bit, about 18%. I'm not sure if you guys caught that. But again, I think I look at 10 years out. There's some stocks where I do like I'll trade in the near term, but a stock like that, I'm looking, I'm going to keep buying into it. Even if it goes up and up and up, I'm going to keep nibbling at it. Yeah. So as far as did I hear anything specific about MP materials this week? I didn't hear anything specific. I just monitored what their stocks were doing throughout the week. But yeah, man, I'm a long-term investor. I did open up a position in MP materials on Monday, and I'm up a little bit on that so far. But again, I'm gonna keep nibbling. What's up?
Do you mind sharing how much you put in there?
I bought 10 shares. The price was about $21. So nothing major. Just threw my feet in there. If it drops again, I'll buy more. If it goes up a little bit, if I feel comfortable with the chart, I look at the charts and I let the charts speak to me. I don't, I try to find the bottoms there, not with what everybody else is looking at. It's down 30% today. It's up 30% tomorrow. I'm looking at 52-week charts. I'm looking at, the dailies, see what the sentiment is all around. Did you end up investing in it yet, Matt? Or you like close? I picture you double Dutch, like waiting to jump in.
So you mentioned if I'm getting back in equities, if I do, it will be MP.
Yeah.
It will be MP. I want to. I'm just not. I'm trying to close certain things out for the year.
Yeah.
But MP's on the rate. I love MP.
You're welcome.
I love MP.
You're welcome.
Yeah,
for that.
I like MP. That makes sense to me.
That's
it makes sense to me.
I know that was all for you, man. That was all you.
Yeah, I felt the same way as Matt.
What's up?
I was gonna say like I felt the same way as Matt. Like it just makes sense, like with the company, like what their message is, like what they're trying to do.
Yeah, I appreciate it. Well, time's about to run out. Thank you guys very much for your time. Colton, thanks for tuning in for the first time. Hope to see you again. Stay tuned for next time. Peace.
Yeah, thank y'all, man.
Later.